to you. You're watching Singapore Calling. In this special show, we get you coverage of Prime Minister Narendra Modi's visit to Singapore and voices from top corporates and top global investors present in Singapore and understand just what their strategy for India is. Our first stop is today at Deutsche Bank to understand what their India strategy is and the collaboration between Singapore and India. Well, Gunit, I'm going to start by asking you about Deutsche Bank. You've just been included into a larger, broader APAC role. What is the APAC strategy for the next 1 year, and where does India fit into the APAC strategy for Deutsche?
About a month ago, our co-CEOs globally, John Crine and Jürgen Fitchen, put out their strategy 2020 for Deutsche Bank.
Yeah.
And Asia Pacific was very well placed there, both in a strategic way as well as where our growth and profitability comes from. If you look at the 15 countries in Asia Pacific, 5 of them are in the top 10 countries of Deutsche Bank globally on P&L terms. And that includes Japan, Hong Kong, Greater China, Australia, India, and Singapore.
Okay.
And India very clearly is strategic. And India, we have a very well-run business there. So Deutsche Bank remains very focused as far as our India strategy is concerned.
Okay. The Prime Minister Narendra Modi, of course, made his visit to Singapore. 10 partnerships were signed, apparently. What I want to understand from you, Gunit, is do you believe that the new government's drive to increase foreign investment, as a foreign investor yourself, is on the right track right now, keeping in mind his visit to Singapore, Silicon Valley, London as well?
So, in my sort of working career of 30 years, I haven't come across any prime minister or president who's taken the personal ownership of attracting global investors into the home market as Mr. Modi has done. So he clearly creates a big wave where he goes, both in the business corridors as well as in the non-resident Indian corridors. Singapore was absolutely no different. I think it's a very good idea because as global growth is slowing, right? Or it's not growing at the pace where all of us had anticipated. I think different countries will compete for capital, different countries will compete for jobs, and Mr. Modi is absolutely doing a great job in revving up interest, not just in the geopolitical space, but in the Fortune 500 company boardrooms to invest more into India. Now, there are challenges, of course, which are well recognized. But I have to say, I'm a big buyer of Mr. Modi. Probably a bigger buyer of Mr. Modi than of India right now.
Buyer of Mr. Modi, that's a definite line. Good, keeping that in mind, the last 1 year, several reforms, several policy changes have been implemented. And that's something that corporate India, foreign investors have been asking for. What more can be done, and has enough been done to create a turnaround? Green shoots have come in, yes, but to create a significant, stable turnaround in India?
So I think what is in the controllable domain, I think there have been a very significant number of reforms. And not just in terms of big bang reforms, but what I would call is the grassroots reforms have happened. And you have to give it to the Modi government for having delivered. In fact, many thought that post the Bihar elections, the government would become very populist. Right the next day, or was it the next week, they announced even more reforms. So I think on the reform agenda, what is controllable is happening.
Okay.
What is not controllable, which needs legislative approval, parliament approval, I just think the government will need to make it more inclusive with the other political parties so that we get the end game, whether it's on GST or many of the other reforms, including the land bill. Yes, green shoots are happening, but they're happening still more on the consumption side, the urban consumption side, rather than on the infrastructure and capex side, which the government must be. I think even if there is a fiscal stretch which takes India's fiscal deficit from the 3.8, 3.9 into the low 4 handle, I think that's good. That's not bad. Countries around the world are using fiscal stretch as global growth remains somewhat tepid. The reforms ahead, I think there are 2 or 3 reforms which would be critical. The bankruptcy code, very clearly.
Yeah.
What the bankruptcy code will do is not subsidize the bad borrowers against the good borrowers, right? So it actually will reduce the cost of capital to the good borrowers, which I think every corporate, every good entrepreneur needs. I also think the government should think about creating a bad bank. Whether it was TARP in the US or it was how China addressed the bad bank issue, right?
Yeah.
I think it's a serious thought which the government should have of floating a large rupee bond, the only purpose of which is to create a bad bank which buys out all the stranded assets, right? So it's something which the government could well consider. Frankly, at this point of time, I find global investors still more optimistic on India than some of the Indian tycoons.
We also spoke to Everstone Capital based out of Singapore. They've been investing heavily in India and they are willing to invest up to $4 billion in the next 5 years if India's reform strategy was on track. Indian investors, of course, seem to have preferred Singapore to Mauritius when it comes to simplification of tax norms, when it comes to investment regulations. What specifically, when you're investing in India, what specifically can be done now in terms of easing the tax regulation, easing the way a Singapore investors can, or an investor can route their capital through Singapore and invest in India?
Look, I think all the, foundation is there. Mauritius still remains the largest gateway.
Yeah.
A lot of FDI comes in through Mauritius. I think the good thing is that the Singaporeans have put a system where it's not really a place where people do what is called jurisdiction shopping.
Yeah.
You have to have substance, you have to have a base. MAS is a fantastic regulator, tough regulator. You have to be regulated. And so the cost of operating out of Singapore is very high when it comes to investing in India. And I think rightfully so, because it allows only people with scale and quality to really base themselves in Singapore. So I think that's great. I think there's a lot that can be done to make it easier. I think the government has already announced a bunch of stuff like investing in AIFs that has made life easier for a lot of investors. And also the fact that there's not going to be any retrospective issues. So I think every day we find some unlocking. One step towards, India, as you know, is an elephant. It takes steps. It can't really sprint. But I think we're headed in the right direction. Okay.
From an FTA point of view, how can the FTA, I believe that there are conversations on FTA being deepened, the CECA being deepened. How can it be deepened right now? Because a lot of services have come under the ambit but probably haven't been implemented as much. What are the areas or structures that can be included in the FTA now?
Look, I think it's not any one thing. The thing is, a lot of people hang their hat on one individual issue at a time, but the reality is that it's a series of many, many things that have to happen. They range from easing regulations to including things that can just come under the automatic route. I think the last series of announcements was a positive one. I think that there are 2 or 3 bits that go beyond just the investing bit that is important. If we are to continue to attract a lot of investment into India, the investors that come into the public markets is fairly simple. You buy stocks, SEBI, good regulator, all that is good. But if you look at the biggest source of real long-term capital that's going to come into India, and I'm speaking as an investor, in addition to companies investing, it's private equity, whether it's in real estate or it's in privately owned companies. But the laws, the regulations, the clarity, contract law, dispute resolution, all that is still a big quagmire in many ways for international investors. If you can focus on how to make that bit easier post-investment, I think you will find a huge amount of investors get more comfort, huge traction, maybe strengthen the company law board a lot more to deal with international investors who are investing in India rather than go through the traditional court system. But there's a lot that can be done on that front.
Okay, so speaking of investments, Everstone, I believe, has above $1 billion of investments ever since it was set up in India till date. So will the pace of investment now increase, given that there are efforts being taken to be able to increase investment to make it easier to invest in India?
We actually have invested over $2 billion in India in the last few years. Real estate and private equity. We will be increasing that substantially over the next couple of years. We have a majority of our investments are investments we own ourselves, whether it is companies or whether it's real estate. We are the largest owner developer of industrial warehouses, for example, in India, which is really infrastructure and a really big need for the country as the government embarks on its big roads program. So I think we're excited, but at the same time, I think the 2 biggest concerns are how investors will get treated when dealing with situations in India, and whether we'll have to go through the same process that everybody else goes in, which will make it harder to deploy capital. And the second bit, generally speaking, whether we will continue to see the currency be somewhat stable, because remember, at the end of the day, we are investing in rupees, but we are really non-rupee investors. And so you may do really well in India on the ground, but if the currency kills you when you look at what your capital gain is, that becomes a source of concern. And that's common across all emerging markets, but I think it's a balance that India has to maintain between exports, where weak currency is good, and inward investments, value destruction, where a stable currency is more important.
And with that, it's time to take a short break. On the other side, we get you Singapore's largest agriculture commodity trader and Singapore Exchange.